So, hello everyone, and welcome to today's webinar. My name is Karima Fenaoui, Research Content Officer at Bloomberg Intelligence, and I'm very delighted to be hosting this session in collaboration with Evenco this afternoon as part of our ongoing efforts to bring valuable market insights to the investment community. And I just would like to emphasize that we've been collaborating for the past 2 years or so. There's an ongoing event, I believe, today in Stockholm as well. Feel free to check the Evenco website. You will have the agenda for the upcoming events, the next few months. And today we turn our focus to an important and evolving topic: diversity and inclusion in investment strategies. While significant progress has been made, challenges and gaps persist in fully integrating diversity within the financial sector. Issues such as underrepresentation in executive leadership, barriers to fostering diversity across sectors, for example, and evolving investor expectations, especially in the light of the recent policy changes, remain pressing. Today, we will delve into these challenges, exploring not just the importance of diversity, but also the tangible impact of its absence. We will discuss how investors, companies, and policymakers are navigating these complexities to foster a more inclusive and sustainable financial landscape. We are joined by quite an exceptional panel of experts today. Hannah Edstorm, Principal at LVT Capital Partners; Olga Miller, Innovator and FinTech Entrepreneur; Mona Shah, Senior Sustainability Strategist at Lombard Investment Managers; and last but not least, Adeline Diab, our Chief ESG Strategist at Bloomberg Intelligence. So with no further ado, I would like to set the stage, starting with you, Adeline. You've extensively studied diversity, particularly regarding women in leadership roles, in your latest Women Capital report. Can you share maybe with us insights on the progress made in increasing women representation in leadership?
Yes, absolutely. Hi, everyone. So we published a global report recently looking at the progress of women on board and in executive leadership in both developed market and emerging market globally. And we also looked into a few other things that I might touch on. But the great news first is that, yes, we have seen extraordinary progress on women representation in the boardroom over the past 15 years. We were below 10% in 2009. We are over 25% today. So we have tripled the number of women representation in the boardroom. In some countries like the UK and France, whether with or without quota, we exceeded 40%. In the US, we're over 30%. So this is great news. Although there are some challenges in regional differences persist in some countries, even among G7 nations such as Japan. But again, globally, good momentum. I would say the other point in representation of women in leadership, well, we've seen some progress in the executive leadership, so the second layer, the CEO, CFO, chair of a board, or CFO level indeed, but we are nowhere near the progress seen in the boardroom. For example, although the numbers of women CEOs has doubled, we're still at a meager 6% on average globally. So still 94% of CEOs in the world are men. So a lot more to do. Where we have gained most ground is on the CFO role, where on average we gained, we're now at almost 14%, with many appointments that were announced recently across sectors. So in that position, there is definitely more to come in 2025. In particular, we have already seen a few announcements. So that's in terms of the progress, Karima.
Thanks, Adeline. So you spoke about executive leadership. Are there any gaps in there?
Gaps, yes. I would say there are two gaps I would mention. The first one is we need to pay attention, I guess, and especially in some region, on overboarding. Overboarding is when the same women are encouraged, promoted, and represented on several boards. So the share, the opportunity is not shared amongst a wider net of women, and that's something particularly true in in emerging markets, for example. So that's one. But the second one, I guess, a gap or challenge that has emerged more recently is obviously the context in the US that has changed over the past few months or weeks, where President Trump has introduced an executive order to end the promotion of diversity efforts. So this is obviously setting a new legal and wider context, particularly for US companies, that they need to adapt to. Most companies have adapted their terminology to evolve and again comply. Many have scaled down their DEI efforts, and the few that are still pursuing those are under increased pressure, although they may be gaining some brand value on these topics in outside the US, I guess. So these are two things that companies, gaps that companies need to manage, particularly in the new context.
Thank you. Quite clear there. And maybe shifting gears, diversity as a performance drivers, and that's what we're here today. Does it pay off, Adeline?
So yes, that's very exciting news from our report. I would say two things. First, for developed market, we looked at the data back to 2018, and it consistently generated across developed market 2 to 5% higher return when investing in companies with highest diversity. So this is a strong signal of quality that can help complement fundamental analysis and portfolio construction or stock selection. For EM, while the performance driver is maybe not as clear as strong, what is very clear and strong is that investing in higher diverse companies over the same time period is consistently showing 2 to 6% lower volatility in markets that are by nature volatile. So two exciting findings to reinforce investors' analysis.
Thanks, Adeline. Now I'm going to move to maybe you, Anna. Could you maybe tell us a little bit more about how fund managers are integrating diversity and inclusion meaningfully into their investment processes, and what does that integration entail?
Yeah, happy to. So at SG Capital Partners, we work with a lot of external fund managers. So across asset classes, across regions. From hedge fund managers to a lot of large GPs across the world. And overall, I would say we've seen a very strong commitment from our managers to DI. We have we do an annual questionnaire that we've done for over 12 years now, where DI has been a question for the last 5 years, and we've seen a steady increase. I think what's interesting now is that we have just started receiving the answers this year, and as Adeline already commented about, the landscape has shifted quite dramatically, I would say, in certain parts of the world. I think what's still encouraging is that we see both from the hedge fund managers and the private equity managers that they seem to overall continue with their commitment to DI. So both hedge funds, over 80% of our managers said they are still committed to DI. On the private equity side, again, over 80% said that they have DI included in their ESG policy. I think where we see a difference is that our hedge fund managers, they more talk about their own diversity. So as a manager, what does their team look like? What is the management? Whereas when we look at private equity, they go much more into the companies that they invest in and also try to implement it in the firm. So for example, this year, we saw that out of those 80% that have DI included in a policy, most of them also said that they consider it when investing in a company, so not just for themselves. And I think what's also good to see is that more than 2/3 of that say that they do it in a very structured way. So if you do it more ad hoc, but but a large group do it in a consistent way. And we're always asking for them to bring examples as well. And I think here it's clear that, I mean, private equities, they're there for a reason. They want to have profitable companies, and we often get good examples on how they could see clear improvements in management of the firms by bringing in more diversity.
So speaking of which, have you, Hannah, Mona, observed any tangible impacts on fund performance as a result of incorporating diversity considerations?
Got some sort of wider comments to make about culture more generally and how it relates to fund management and performance. So Hannah, would you like to go first?
Go ahead, I can.
Hi everybody. I worked for almost 20 years in wealth management with a strong focus on manager selection. And the way that I view the world, and I think many others now as well, we've got something in the UK called ACT, Action, Challenge, Transparency, which is a very broad questionnaire that goes to asset managers about their culture. And I mention that because diversity and inclusion is just one pillar of culture. And sometimes I think it really helps fund selectors to think about culture, the customs and norms and values in an organization more broadly. And the reason why I say that is because investment performance is one thing, particularly we're all obviously focused on the positive side, but on the negative side, when a manager leaves, that's a big problem, particularly if there hasn't been proper succession planning, or someone who doesn't know the asset class or strategy so well is caretaking the assets, maybe the CIO, whilst the manager's not there anymore. So I really encourage people to first think about culture from a broader perspective, the extent to which there's challenge, psychological safety, benefits, even if it's maternity leave benefits. Clearly that benefits men as well when they have children. And so I think in this world where there's much more consolidation in funds, buy lists are becoming smaller, etc. I do think that thinking about manager tenure is a big part about thinking about downside performance.
Yeah, I think exactly that is a very important point. That, I mean, for us, it's difficult to clearly link diversity across our managers to performance. We haven't been able to make that clear link. But I think what's really important is that risk management factor where we clearly believe that by having more diverse thoughts in a team, you will be able to pick up different risks when you invest in a company. And I think that's where it's so important to have diverse teams where I think we hear from time to time really good examples where people just see different things within a company. If you have different backgrounds, if it's different genders. So I think that risk perspective is sometimes a bit undervalued. A lot of times we speak about, I mean, in the end, that leads to good performance as well if you have your risk under control.
Yeah, if I can just add to that, it's exactly as Hannah was saying. It's really hard to find the data on that linking diversity in teams to better performance outcomes. So I think it's important to look at signals instead. Signals like, is challenge embedded into the process? How often do teams do blank paper exercises? Does someone always take a devil's advocate stance? Those sorts of things are really helpful.
Thank you both. That was quite insightful. Now maybe shifting gears, and maybe Olga, you can maybe enlighten us and give us your view on what does the absence of diversity mean in practice for businesses and markets, especially considering your background and experiences?
Absolutely, huge pleasure. I mean, you might know that I'm one of the pioneers of gender smart or gender lens investing, right? And have been kind of propagating more diversity in financial services for more than a decade now. And actually, I think that financial services in itself is a wonderful example what the absence of diversity really means. Because research published, I think, about 18 months ago by BNY Mellon, they asked lots of financial services firms. 80% said, we are developing financial products by men for men. Yet there is this economic powerhouse of women, which is de facto a bigger market that is larger than China and India combined, right? Women are one of the largest economic powerhouses. So the absence of diversity actually means that you will be missing out on that market. And I think that no investor wants that. Whether you are a financial services firm, whether you are an investor, right? And that is why I think there is such a strong economic case to consider diversity criteria in whatever shape or form you do it, as part of your workforce constellation, as part of your investment hypotheses. There just is this incredible business case that anyone who doesn't want to miss out should basically implement some basic analysis, as simple as it might be, right? Because there are huge issues around the data when you create financial products that potentially could factor in diversity, right? It's not that easy. It's easier said than done in all respect. But still, we have to kind of stop ignoring the fact that there is this big market and this economic underlying. So the absence of it is missing out. And that is actually why I am so surprised about these new directives, in all honesty, and not to be political here at all. It's just that economically, to me, it makes no sense.
Thanks, Olga. And I'm going to stay with you there just because, I mean, given your background of an entrepreneur, do you think it leads the cost of action? Does it lead, or the absence of these practices, does it lead to challenges in attracting talent, capital? What does it also mean, overlooking diversity in terms of impacting long-term success of smaller businesses? Or any view on that, given you're an entrepreneur yourself?
Yeah, absolutely. With huge pleasure. I mean, we all know that there is a huge funding gap for female entrepreneurs. I think globally it has been estimated at about 1.7 trillion. We know that female entrepreneurs receive a lot less venture capital. Fair to say that they also have learned to be very resourceful and therefore, in most cases, ask for smaller tickets. So there would be actually a huge funding gap to close. And good news is that in many countries, such as the UK, a lot of action is being taken in order to close that funding gap, also with an economic paradigm in mind, right? So I think these are very, very positive signals. So I think every economy should strengthen its diverse founders. And do we need help? And I'm saying this as a female founder that's been through the process of raising capital for my startup successfully. It certainly helps. What I observe now is that in the absence of the wider system changing, is the women taking charge. A lot of these kind of smaller scale VCs, angels, deliberately financing diverse companies, not just women owned or women led, but really with mixed teams, and actually making great business cases out of this. So I think that is very positive. Do we want to unleash, again, prosperity at scale? I think then the wider financial services ecosystem needs to start embracing this opportunity at scale. The VCs, the angels, as well as the product structurers, right, to start embedding diversity analysis. Once the capital speaks, the wallet speaks, the world will change very, very fast.
Thank you, Olga. And you all, ladies, at one point or another mentioned the current ecosystem and some of the current challenges. So given recent shifts, maybe to you, Hannah or Adeline, how are investors adapting their approaches to diversity?
Yeah, happy to start. I mean, we are in this new regime only for quite a short time. So overall, we haven't seen that many changes. I think, again, there we have seen such a strong commitment from our investors over the years to DI, and we, as a manager, receive very many, very detailed questionnaires around how we manage DI, as we send to our managers. I think there have been a couple of news in the last couple of weeks where a couple of investors and also large ones have gone out and really confirmed that they stick to their current DI strategies. So, for example, CalSTRS was big in the news that they stay to their with their commitment. What we have seen on a few selected cases is that investors have reached out to us to discuss these changes and kind of how they can manage around it, wanting to actually stick with what they have, but knowing that they can't do it as explicit as they have done in the past. So I think I can't remember who was mentioning it. It was Adeline in the beginning, that what we see is that they're a bit changing the name of it, trying to stick to the strategy, but a bit changing what kind of questions they ask us, and maybe not asking about diversity, but asking about inclusion and other things. So I think one thing that we're interested to see, because we have received a lot of very detailed questionnaires from our US investors in the past asking for a lot of data. So I think that would be interesting to observe this year, is if we see a change in that.
So it makes me actually want to shift to what was my plan to be next topic, which is proxy voting and policy shifts. So with IS removing now diversity considerations from its proxy voting guidelines, the automatic push for diverse boards has been quite weakened, if I may say. How should investors respond to this shift? Maybe Adeline, maybe you can comment on the proxy voting policy shifts in a more broad way, and maybe Hannah as well.
Absolutely, happy to. So I think on the proxy voting, we have seen different perspective, right, amongst proxy providers, some adapting their policies, others standing by their policies. Now, so I think two trends I'd like to highlight. One is the shareholder proposals versus proxy voting we have observed based on our analysis. So one, looking at, for example, proposals in favor of DEI efforts, this shareholder proposal, the numbers of shareholder proposals have increased and is consistently increasing and is continuing this trend. So this trend has not reversed over time, over the past few years, even this at the moment. And there, in terms of voting, they get about 30% support. So investors voting in favor of these proposals that are in favor of diversity efforts. On the opposite side, the observation we have looked at recently and published on is that the shareholder proposals that are focusing on ending the promotion of DI efforts, these have tripled in numbers in the past year, 2 years. They're still below the proposals in favors, but they have still tripled in numbers. So that's a trend. However, what is interesting is to see that the support for them is 2%. So it's below 5%. So that shows that the investor view is not voting in favors of those, which maybe reflects also a wider or more global group of investors. So that's, I think, an interesting observation from a voting perspective.
Yeah, maybe just adding 2 points there. So if we look at the voting that we do on an annual basis, the topics where we're most active on and voting against either management or chair of nomination committee, that's on climate and on diversity. So last year, we voted against the chair of nomination committee in 30 cases in the US. And we have quite small portfolios. So this is quite a lot. That's 40% of the AGMs that we voted on. So that was quite an active vote. Now, that was in line with ISS last year. This year, as they are changing their stance in the US, we have for us decided to stick to the 40% gender threshold that they had in the past. What it means is a bit more manual work for us, because we will have to always overrule the automatic recommendations that come in. So it's not a huge thing. We can stick to our beliefs, but we also do see quite a lot of managers that actually just vote in line with the proxy voting agencies. So there might be some changes here.
Thank you both. Maybe now moving to the regulatory and policy support here. Policymakers have made a significant role, have a significant role in advancing diversity and inclusion. And maybe Mona, you can tell us a bit more here. What role do you see for policymakers in promoting stronger integration of D&I in financial markets, obviously?
I think this is quite it's a bit more of a ticklish question at the moment. I certainly am going to be answering it quite subjectively. I think the first thing to say is that I think we can ring-fence government's efforts in this space, because now in 2025, we all know what good looks like. There have been significant academic studies in this space. We've seen everything from Abenomics or Womenomics, say, to other ways of getting women and people of different ethnicities, diversity, into the workplace. I think we all know what good looks like, and so we can all be pushing the companies that we work for to step forwards more, whether it's disclosing data or improving cultures, policies, habits, etc. But just on your specific question about government policies, yes, more data can be disclosed, etc., etc. But my take on it at the moment, actually similarly to Olga, is we can really think about it from a macro perspective, from a growth perspective, to say, how can we improve productivity at this time? Well, we can upskill our workforce, and that often means women and minorities. Classic supply side policy that we heard about in the 80s. I think that's really important, and where a good example of where that has been executed on fairly well is actually China. In no way am I saying China is a poster child for diversity, but China has done a really good job at putting forward more training and upskilling women in STEM. Particularly, women in STEM now are much more qualified and much more skilled than many parts in China specifically, than many parts of the Western world. And as a result, actually in China, you see 30% of businesses being owned by women, whereas here in the UK, it's less than 20%. So for me, it's not necessarily about thinking about policies just from a D&I perspective, but I want governments to think deeper about productivity and growth.
Thank you, Mona. And I'm just going to make a quick disclaimer here. We're receiving a lot of questions in the chat for all of you. I'm very happy about the engagement we're getting out of this. So I will start taking all of your questions towards the end. I still have just a couple of few questions more, and then we will shift gears to what our clients want to discuss. I have a few for each one of you, so please stay with us. We'll be taking those questions very, very soon. Now maybe moving to technology.
Karima, may I just maybe make one point? Apologies for on the regulation. Sorry, because I think the question you asked is quite important. And from our analysis, we see regulations have been an important, significant driver bolstering diversity efforts globally. Without it, the progress we have seen would not have happened. So it's an extremely important question, and we have to recognize that this has mattered. And again, whether some countries have decided to establish quotas, some countries where we have seen now 40% reaching 40%, or the UK that decided not to pursue the quotas avenue and still achieving a 40% almost average on women on board representation. And what we are seeing now is, for example, Hong Kong calling for at least one woman on board of each companies listed on the Hong Kong Stock Exchange. But what is, I would say, more interesting even is Japan. Japan has been lagging relative to its peers like the G7 nations, where it's a very male-dominated culture. And what is exciting, I would say 2 points before, just to finish, is that by the end of 2025, they're calling for one appointment, women on the board for companies listed on the Tokyo Stock Exchange. But what is even quite more forward-looking is that they are calling for a 30% representation by the end of the decade, so by 2030. And what this means, if we look at the numbers, it's opening over 1,000 women director appointment opportunities over the next 5 years. And this is transformative, and this could set and be looked at as a roadmap for other countries to follow as they want to pursue and have women penetrate that executive leadership. So this is, again, regulation can be quite transformative in addition to shareholders' activism or votes.
Thank you, Adeline. So moving maybe now to technology, data transparency, it's a big component as well. Olga, in your views, how can innovation enhance D&I transparency and reporting, and what gaps, exits in current reporting frameworks?
Look, I think the sad truth is that with the implementation of AI that is so biased, actually all of these modern tools are not really helping. So I think that's probably one thing to consider, right? Because AI is learning from today's world, from today's systems where women and diversity, also other minorities, are underrepresented or misrepresented. And I think that that is a challenge that really has to be tackled very fast, because as AI in particular starts to be used, for example, let's say in financial services, for example, for credit scoring, for loans, for anti-money laundering, etc. If it is not, or leaving out a certain proportion of the population by default, it just will accelerate the inequalities that we already have today. So if you were to ask me about one thing that is worrying me in particular, it is really this, that we are developing new technologies so fast and so skillful, yet we are training it with data sets that actually are not an equal representation of the world. And that, I think, to me, would be the biggest wish to be tackled, and maybe to the role of the government that was discussed earlier, which I think is very, very important. Governments also will play a fundamental role in setting boundaries and standards when these new technologies get developed. And I think there would be a big picture to be played to actually ensure not only ethical rules, but equal representation rules as well. Otherwise, I said, we are not looking at a super bright future, regardless of recent developments or not, because technology will be working against diversity. So I think it's probably a long-winded answer to your question, but I think if there was one thing that I wished that we were to tackle, is really everybody who is programming new systems to really be mindful of diversity standards. That would change a lot. And everyone who is investing in founders and in new startups and in companies that are programming technology, never mind whether it's programmed by men or women, just please ask the question whether, there are some diversity standards. Without that, the world will never change.
Thank you very much, Olga, for that. My last question, and it's actually also a question asked by one of our clients, is regarding sectors and geographic trends. So maybe Adeline, as I know you've published quite religiously on that, which industries and regions are leading in leveraging diversity to enhance financial performance?
So interestingly, financials and healthcare are the sectors that are made the most progress in this space. And in contrast, a much younger industry, which one could expect to be more diverse, I guess, isn't, and it's the tech industry.
Yeah, so indeed, that's quite surprising. We've discussed it just before this call, how tech seems to be lagging versus the financial sector.
And there's actually one point that is interesting that I've read recently is that unfortunately women seem to be less likely to adopt or to embrace the AI trend. So not only in terms of the development, which we were talking about just now with Olga, but actually also embracing this big disruptive trend. And men are I want to say are almost twice to 3 times more likely or more embracing it. And that could create quite a gap in terms of upskilling and maybe opportunities if the world, or as the world does, endorse and embrace this technology. So maybe one call to action is also to encourage women to get on the AI ladder and to explore the AI apps and opportunities for their career, for their skills, because that's a train that is moving fast, and that could create a gap that we need to be actively working towards.
And just to clarify, Adeline, when you mentioned that women are embracing less than men, it's just AI or technology more broad?
AI, or that's what I read. So again, that's not something we researched. That's quite more of a personal or more of a something I read twice, and I'm happy to share like the links later. And that's why I said like twice to 3 times. But yeah, men are exploring ChatGPT for various things or other apps to maybe optimize their productivity, or to look into other whether it's calendars or whether it's thoughts or creative thinking when they have a project, whilst women are staying more away or not adopting or exploring. And hence over time, as these developed and do take over or are part of the workflow of professionals, if men have played and looked at and know more which apps are pertinent or what can be done and why, then that could create a gap. So that's why encouraging women, girls to look into AI and explore what is possible, at least to be aware, is quite important to continue that journey of progress.
Thank you, Adeline. And now shifting gears to our client's question here, and I'm going to just take it as it comes. So first, I have a question specifically for you, Hannah, but please, for anyone else who wants to comment as well, feel free. How do you integrate diversity factors into portfolio construction and manager selection?
Thanks. So maybe start with the second part of it, how we integrate it into our manager selection process. So as I mentioned before, we have first an annual questionnaire that we send out to our managers, where we ask several questions about DI, both if they have policies around it, but also if they integrate it in the investment process, and really try to find going down into the level of bring us examples. So one example was, again, we see hedge fund managers more looking at it at firm level, but we had some good examples, we thought, where hedge fund managers said that one of their issues is still to find good talent, and that's why they started working with universities in their area to educate underrepresented groups, not just women, but underrepresented groups in math. So I think those are the kind of initiatives that we like, that you really analyze the situation and where can you have impact. And we see similar case studies also how it's been integrated in directly into private equity companies. When looking at it in our own investment strategies, and I think that's still one of the struggles that we have, that the data you get is still quite high level. I think it was Mona who mentioned that you want to understand the culture, you want to understand the drivers behind it. That's quite difficult to see in a set of data. So I think what we're still looking at when investing directly into, for example, listed companies, is a lot still high level board diversity, management diversity. We are exploring different sets of data, but we still haven't really found a better way. Of course, we then also speak to management and speak to the companies to understand it better, but on the data side, it's still very much gender focused and quite high level.
Thank you, Anna. And obviously to our clients on the call, please feel free to reach out to us, to any of the panelists today on LinkedIn directly if you want to discuss further any of these topics. Next is for you, Mona. Sustainability and diversity are increasingly interconnected. How does Lombard Odier align these two in investment strategies?
It's a really good question. I know that some asset managers do have gender specific lenses that they put on their investments and portfolios, or maybe there are indices that have been constructed to do this. For us, specifically in the sustainability pillar of our investment stable, we're investing for an end state of a transitions economy that is net zero, nature positive, socially inclusive, and digitally adapted. And so in the nature positive and socially inclusive, and obviously digital runs across many of these things, we definitely have investment strategies that benefit female farmers, that improve access to healthcare, education, etc. But we don't have a specific gender focused fund. It comes more sort of thematically through these structural changes.
Okay, thank you, Mona. Now, Olga, maybe this one I think is for you. How can fintech and technology-driven solutions improve access to capital for underrepresented entrepreneurs?
I think by walking the talk first and utmost, I will just share a story with you, right? I come from Switzerland. It's a very interesting country when it comes to diversity and gender equality, honestly, if you look at our data. And within that country, I'm still almost always the only fintech founder being a woman. So when I discussed with some of these accelerators, etc., it's like, yeah, we can't find the deal flow. We can't find the deal flow. There are no women applying. So I actually think that every founder, if they have a diverse team, should also try to kind of change the broader ecosystem. And that is putting yourself forward as an example, right? Rather than hiding behind the trenches. So that would probably be my number one tip. To the point on data, I just wanted to add, actually, there are two really interesting frameworks, I think, to be considered, which we didn't discuss yet. One is the XX Challenge, which actually issues a very comprehensive list of criteria that financial services can adopt when making investment decisions, to include diversity criteria. And the other one is the Equileap framework and Equileap Research, which is an independent foundation and actually issues tons of data across a variety of standards. I think when we were constructing the UBS Gender Equality Leaders ETF, it was a framework of 17 criteria. So this could be maybe two interesting resources on top of what's already been discussed, that folks that's listening here could consider if they really want to start embedding diversity into their analysis and product makeups. And to all the fintech founders who are listening, step forward, okay, and vote for diverse teams. Make your team diverse. Start with your own house. There is no better way than that.
Well, thank you, Olga, and you got the chat quite engaging. I'm receiving even more questions now. Thanks for that. So yeah, actually, users thanking you, Olga, for this pep talk to them. So just received one now that seems actually quite interesting as well. For you, Anna, specifically, what are the most common barriers asset managers face when trying to implement diversity-focused investment strategies?
Good question.
Obviously, for the whole floor, I mean, Adeline, Mona, happy for you to also comment if you wish. The most common barriers.
I mean, I think coming back to Olga's point a bit, what we hear, and also what I mentioned before, is that it really starts with recruiting, and a lot of firms still kind of blaming it on recruiting, but maybe also not being. If you continue doing things you've always done, nothing will change. So I think it's then you won't get that broad-based application. So you probably have to really start looking at it in different ways. And I think, but I still think that's the most common comment that we get, that we're trying, we had this role or this opening, but no women applied. So we couldn't find anyone. So I think that's where you really have to change how you look at recruiting.
And it actually, if I just can add to it, it actually starts with the recruiting agencies. I was running a project recruiting for finance specialists, and the recruiting agencies were only sending me male candidates. Okay. It was a hiring process until we spoke to a couple of them and say, why are you only sending male candidates? Yeah, we were not aware. So I think it even starts deeper in the pipeline, where one needs to make a conscious effort to actually brief properly, to say we are actively welcoming diverse candidates for this job.
I believe, Adeline, you wanted to?
Yeah, I was going to just say, and maybe Olga touched on it, but I would say it's actively tackling unconscious bias. As Hannah and Olga mentioned, I think practices have been in place for the longest time. But for hiring, I often heard something as due to the limited pool of candidate or limited pool of women candidates. But definitely there are smart women and equally educated. And we know that 50% of, people coming out of Ivy Leagues and top universities are women. So the pool of candidate does exist. But it's about, one, tackling unconscious bias, and two, promote or setting in place active program to maybe as whether it's mentorship or sponsorship, to actually raise the visibility of women, to create opportunities, and to do it in a way that is obviously meritocratic. That's definitely the focus and important. But yeah, tackling unconscious bias is probably maybe a summary of that point. Yeah, I'm trying to make.
So let me run through the questions as we keep receiving. So I have one actually for Mona and Hannah. Are clients actively asking to have diversity investment vehicles? And if yes, are there mainly women, men, or they're equally interested? Do you have any feedback on that?
Experienced many conversations around clients asking for more diverse investment vehicles or strategies. There have been a few, and by the way, it hasn't just been about women. I've had clients ask about an LGBT strategy, for example. But I think the main thing that it comes back to is always the robustness of the strategy, how systematic and repeatable it is going forwards. And so with that LGBT conversation, for example, really hard to find data, a really tricky one, very difficult to do. Yeah, I'm interested to hear what other panelists are going to say.
Yeah, I think focus from our investors has been more on diverse investment teams. So not really asking for specific strategies, but more looking at both the teams that manage the strategies and then also what kind of companies you invest in. So I wouldn't say that we have seen a very strong push. I mean, what we have observed is in the US that you have certain peer programs that focus more on female founders. So that's definitely a trend that we observed for a couple of years.
Thank you, Hannah. If no further comments on that, I would like actually to take one question that I was saving for the end. If you had to give one piece of advice to institutional investors hesitant to embrace diversity-focused investing, what would it be?
Happy to take a stab at it. I would say look at the data and take it into account as part of your investment process, since that we have evidence that it can help fine-tune and improve and enhance stock selection.
Yeah, along the same lines, I think making good investments is a very complex task, and by having a diverse thinking going into that process is very helpful.
I think mine would be to say to them, go back to first principles and ask yourselves what tenets of your culture more broadly make the environment conducive to portfolio returns. And starting with a blank piece of paper and then moving forwards that way until you get to diversity and inclusion, I think would be a really helpful exercise for everybody.
Yeah, and on mine probably would be to test whatever you are developing with a diverse audience. Get some feedback on it rather than assuming that, you know, this is the holy grail of a product. I know we all are incredibly passionate about our solutions that we develop naturally, but sometimes it helps to just get different viewpoints, right? Which not every asset manager, for example, needs to have a 50-50 share of women. It already would be enough to sound with a diverse audience, whether that actually resonates with them. You ask for feedback, you will be given feedback.
Thank you, Olga, Adeline, Hannah, Mona. It was truly a pleasure to have you in this panel today and to listen for female leaders like yourselves, quite frankly. And I'm sure the audience feel the same way, as I think I've been doing the Ivanko's forums for almost a year now, and it's the first time I'm getting this many questions. Normally we almost have to fill in the gap, but it's really interesting and nice to see the engagement we got and the tractions we got from some clients. I hope you all enjoyed participating as much as I enjoyed moderating this panel. And to our clients, please feel free to reach out to us in social media and to reach out directly to Ivanko as well. I know Ivanko is doing a lot of articles during Women's Month. So please have a look and follow them also on LinkedIn. I know they publish quite some very useful recaps that I do read. And so again, we have a strong community of female speakers and leaders that come also in person to these events. So just feel free to tag along. Again, many thanks, all of you. Olga, Anna, Mona, Adeline, and hopefully I'll get to see you in person in upcoming Ivanko events. Thank you, everyone.
Thank you, Karima.